Hi, this is Zach Mee with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 27th of June. Starting off with the FTSE 100, which is dancing either side of the initial June support, 74.45, which is clearly very exciting. We've got a support line projection from the beginning of April, heading down to 73.60, and that is currently the envisioned downside for the market. That would tie in with the RSI for the FTSE getting down to the 30 level or just below, which in the recent past, back in May, March, and previously has been the buying point for the market. Obviously in March, that was a quite a big move there from around 7,200 to 7,900. And in terms of an earlier trigger than waiting for a bounce, it would be an end-of-day close or a couple of days close above 74.45. That would then suggest we're heading back up to the April resistance line around 76.50. On to the DAX, which has been rather more resilient than the FTSE, obviously, and here you can see that we're just hanging above the old turn of the month support, 15,600. We've had higher lows than that, which is encouraging. RSI below 40, or below 50 rather, neutral 50, so that is a worry in the sense that the market could roll over and head back down to, say, 15,300, which was the late March resistance, and that would hopefully then become new support. Still a bit of a head-scratching exercise at the moment as to whether we will actually fall out of that rising trend channel from back in September properly, or whether this is just a bit of a bear trap and then we head back above the 50-day moving average, 15,900, and then go on to 16,300 plus sometime next month. Moving along to the Dow, which is also quite interestingly placed at the moment. Here the situation is that we're toying with the 50-day moving average. We've bounced off that a couple of times so far this week, or just above it actually, and 50-day line there around 33,600. Above that, on an end-of-day close basis, we're looking for the market to then recapture the broken April resistance line there, 34,000, and hopefully head up to a March resistance line projection of 34,800 by the end of next month, or hopefully sooner. On the downside, nightmare scenarios that we have to go and test the 200-day moving average, 32,900 again, even though we tested it several times back at the end of May and beginning of June. RSI at 40, just under 49, so a bit of a neutral situation, but we'd like to see that back above 50 as quickly as possible. Below that would then suggest that we are indeed heading to that 200-day moving average. Moving along to Bitcoin, and here one can see that this market is, I suppose it makes the indices look rather lame compared to the recent performance here, hanging above the 30,000 level in a bull flag, hopefully a mid-move consolidation. We've got the 50 and 200-day moving averages both rising at the moment, and while we're above late May resistance at around 28,300, looking for fresh leg to the upside, perhaps as high as 35,000 by the end of next month, which is the top of that rising trend channel from this time last year. Below 28,300, then there would perhaps be a retest of the 50-day line at 27,000, but we're not expecting that at the moment. Moving on to the stocks, and one of the most horrific looking breakdowns of the recent past, and obviously has had quite a lot of competition, is been AMTE, and here it's an interesting pattern that we have. Double bounce today and yesterday off 5.5 pence. RSI has been down to low single figures as well, which is obviously rather painful. Yesterday's high 6.25, so an end of day close above yesterday's high could be the first sign that the shares are ready to head back to maybe 10 pence, which was one of the support levels on the way down, and maybe as a best case scenario up to 13. We get a bit of a bear squeeze there on the fader to go back below 5.5 pence, and the fact that obviously we're very oversold at the moment, but that is a classic catching a falling knife situation, so obviously not for all, but let's just see. 6.25 plus may give some enthusiasm, encouragement to bottom fishers there. Less fraught situation comes in the form of Argos Resources, and here we've got a classic combination of an uptrend line in the RSI window and a break of a falling wedge, in this case at 0.4 pence. Above that, looking for the 50-day moving average at 0.64 pence, perhaps as soon as the end of next month. Best case scenario over the next 1 to 2 months would be up to 1.1 pence, but obviously it's rather early days to project the shares back up to where we were back in April. But the key here is holding 0.4 pence. Moving along to Asiamet, which looks as though it might finally be getting its act together after a long time in the wilderness. Plus points here are the uptrend line in the RSI window, so that's a bullish divergence line. And the real interesting part here, which is quite unusual, both the 50 and 200-day moving averages are both rising, and that suggests that we're heading into a golden cross sometime the next month. The run up to a golden cross tends to be the strongest part in the cycle. The main proviso there is that we hold above 1.1 pence, and obviously we're not far away from that at the moment. Recent support of that sort of area, 1.09 maybe. And above that particular level and the 50-day line, looking for a break up towards 1.5 pence, perhaps as soon as the end of next month, if those rising 50 and 200-day moving averages kick in for the stock. On to Barclay Energia, which I've covered a couple of times recently. Here, with the ongoing breakout, we broke a line of resistance there from back in March last year, around the 24 pence level. Above that, we're looking for as high as 43 pence by the end of next month, at the top of that late 2021, early 2022 rising trend channel. 50 and 200-day lines both rising, of course, and the upside valid while we're above, especially while we're above that old early 2023 resistance at 26 pence. Moving on to a stock which doesn't get much coverage either here or anywhere else, actually, Evgen Pharma, but just the first signs of recovery here. Bullish divergence line, or at least an uptrend line there in the RSI window. The MACD starting to cross as well, and the view here is that an end-of-day close above 3.2 pence, which is recent resistance, could take the shares up to the 50-day line, 3.7 pence over the next couple of weeks. Best case scenario is by the end of the next month, we're up at 4 pence, and basically the early 2023 resistance for the shares. And obviously we don't want to see any new lows below 3 pence. On to Fusion Antibodies, which is vying with, or has been vying with AMTE in terms of the most precipitous decline. Here it's interesting that we had basically 7.5 pence as neckline resistance. That was broken, and then we headed towards the 10 pence zone. Maybe the shares are having another go now. 7.5 pence has come in as support. Break of basically the peak there at 9.87 could be enough to then take the shares up to the low teens over the next few weeks. But that is obviously a best case scenario at the moment, and if we don't get through 10 pence then on this attempt, then it could be a negative. Moving along to Hemogenics, which has been behaving itself quite well of late, bouncing off the old November-December support area, and now currently consolidating either side of the 50 and 200-day moving averages, grey and blue lines there, but still expecting, while we're above 1.5 pence, for the shares to hit that February resistance line at 2.3 pence by the end of next month. Nice RSI rebound off the neutral 50 level, which tends to be a consolidation signal, and if you're cautious, you wait for an end-of-day close through the 50-day line at 1.86 before assuming 2 pence plus is on its way. On to a stock which had a great announcement today in terms of pediatric brain cancer. So hopefully the FDA will give the company the green light on the orphan drug status of that particular treatment. Current situation is that we're looking for 3 pence to break neckline resistance since basically March, and that would hopefully give us a retest of March resistance of 5 pence plus, ideally as soon as the end of next month. RSI bounce off neutral 50 as well, so it does look as though with both the 50 and 200-day moving averages rising, like they are at Hemo, we could get a decent move out of this situation, especially while we remain above the 50-day line at 2.6 pence. Sticking with the biotech area, Proteome Sciences starting to push up as well. We've had an unfilled gap to the upside for the start of June, and we've hit one of our targets, 6.5 pence. Above 6.5 pence, we're looking for a fresh leg to the upside, hopefully as high as 8 pence, which is a resistance line projection from 2 years ago, and we can hit 8 pence ideally as soon as the end of next month. Extended RSI uptrend line there, multi-tested, so that does suggest this current move is serious, especially while we hold above 6.5 pence. Moving along to one of the better situations of the month, which continues to cheer the bulls. We've got Predator with the unfilled gap to the upside, bear trap gap reversal that we had at the beginning of the month, and we followed through on that very well, as you would expect with that kind of signal. Rising 50 and 200-day moving averages, which suggests we're just days away from a golden cross. The run-up to a golden cross tends to be the strongest part of the cycle, and that's what we're seeing at the moment with the gap high that we've had today. 15 pence the target over the near term, maybe the next couple of weeks, while we hold above the latest gap around 11 pence, above 11, looking for 15 on the Predator daily chart, and ideally that would be over the next week if we're lucky. Stock that I missed out on yesterday is Scotgold, or Scotgold in fact. Here the shares tick back a bit after yesterday's massive move, but the view here is still that with a rising 50-day line at 15 pence, above that we could hit the top of that broadening triangle from back in the end of March as high as 26 pence by the end of next month. But given the history of the stock, we were early looking for 26 pence while we're above that 50-day line. And a lot of stocks, as we've seen of late, it's a one-day wonder rally and then sellers come in. Moving on to Synergia, which is looking more chirpy than it has for a while. Here we've got break of a May resistance line there around 0.13 and a rebound, a bear trap rebound off the rising 50-day line. We've had two of those this month, which is encouraging. Above the 50-day line, we're looking for as high as 0.22 as soon as the end of next month. RSI back above the neutral 50 level, which is also a help, and I suppose things will speed up on the upside once that 200-day line starts to rise. Been throwing in a few larger stocks of late. Today's special guest is Telecom Plus. Massive key reversal to the upside, so breaking yesterday's low and then going right through to make new highs for June. The old high here, £15.92. Above that on an end of day close basis, looking for a retest of today's peak and the 50-day line around £17. Big picture target, while we remain above £15.92, and only while we do so, is up to £19.40 and the 200-day moving average. But obviously that recent resistance has to remain in place, and ideally the shares remain above neutral 50. Finishing off with Zanaga, which is sort of behaving as if we're in a bull market, not a horrible bear market. The initial target here up to 12 pence. The next target, the red line there, up to 15.5 or 16 pence. And the view now is that while we're above 16, we can head as high as 25 pence by the end of next month, which is a resistance line projection from back in December. So what a performer there, and what a great June that stock has had. That's it from me today. More updates tomorrow.